you want to talk about tax, you want to take a loan. All these things are hinged on these simple bookkeeping methods. Now, we have two types, two ways you can keep your books. One is the cash method. You understand why it is big like this now? You should be able to hold how many years? 5 years of your record. So if you are using those small exercise books, please throw them away. You have to buy this. It's part of your assignment. You have to buy this book, snap it with your picture, and show me in the WhatsApp group. You have to do that. Now, when you have bought this book, there are two ways you record. Look at the screen. The first one is the single entry method. The single entry method. In this one, you have your income in one book and you have your expenditure in another book. Now, the one I'm recommending is this one, the double entry method. So this is the double entry method. Now pay attention, just look at the screen. You could see on a basic day, you have activities. So what you're doing is either you are getting revenue or you are spending money. So you can call it income, you can call it expenses, whatever name you call it, but it's revenue and what? Expenses. We call it double entry because all of them are on the same sheet. So look at this person, for instance. On the 11th, he performed a repair and he got a revenue of 250,000. You can see that. On that same day, he paid electric bill, which is expenses, of 125 naira. Now, pay attention. This is called the double entry method. You must do this every day because there's no day you go to your shop or your business, you don't make expenses. You must do this. Now, watch this. Assuming you're not selling service, you sell products. The next column there is the invoice. It is a sin. What did I call it? It's a sin for an entrepreneur. I'm not saying a businessman. It's a sin for an entrepreneur to spend revenue without that money hitting the bank first. You can pay it in and you withdraw immediately. I will tell you why it is that important. Now pay attention. A lot of people today, you all know how the banks work. If you are taking 10 million naira, some banks have increased it to 20 million naira. They're no longer asking you for collateral. So what are they looking for? They just tell you to bring your account statement. And in your account statement, they want to see your turnover. Do you know that I have attended to some people? They come for loan, and when I check their total income in a year, it's not up to 3 million. Now, when I visit their shop and I take inventory, they have over 30 million worth of stock of inventory. So what has happened? They were not paying money into the account. They sell, they keep the money, they use the money to buy raw materials, or they use it to restock. That is very, very wrong. If you are using this method, I want you to realize that you will never, ever get credit. You will get credit, but probably know that no bank will give you anything more than what your yearly turnover is. So if probably your yearly turnover is 3 million naira, be expecting they will give you like 750K. Then you start to complain. So this is why it's very, very important. Number 2 is your tax. Please pay attention. Any money that comes into your account, because some of you do business with their personal names, the tax office sees it as income to you. You can see what is going on now. They have taken over our need, BVN, so no running away. So if the tax people see an income of 5 million naira in your account and they bounce, what are you going to do? Well, you have a right to complain. But if you do not have evidence to show that these are proceeds from my business, by providing this book, providing your receipts and your bank tellers to show the flow of that money they saw in your account, you have to pay. Gone through your business in a year, you perform audits. So some audits that you do are routine, the other ones are timed. So put it on the screen. So we have what you call both internal audit and external audit. Please, it's important you do this. Some of you are very lazy. I want to tell you now, nobody is good. Listen to me. Did you hear what I just said? Nobody is good. If you are looking for when you will employ an angel to work for you, then you will have regrets all through your life. What drives a business is the process you have. It's not looking for good people. They don't exist. So if you do not set up a proper mechanism of checks and balances in your company, of course you'll be losing. So we have 2 types of audit. We have the internal audit and we have the external audit. The internal audit is within the company. Within the company. So some people do it every day, especially people who are running on high inventory. Some do it every week, some do it every month. So you use this to ensure that you minimize losses in your business and improve operations. Now you have what we call the external audit. The external audit. Now please pay attention. Your businesses are growing. By the time you start looking for big money to scale up your business, one of the requirements the bank will ask you to bring is audited account. I'm sure you people have heard about that. That's what you call external audit. So now you are not expected to do this audit. You're expected to bring a chartered accountant who will come to do what? Do the audit. Now, guess what? If the chartered accountant comes, what do you think he will ask you to bring? I was looking at most of your work. They're all forged. All those projections you people want, I know they're all forged. Because you don't keep records. I'm not saying that does not represent your business, but those are all fictitious figures. Now, when your auditor comes, he'll just be asking you for 3 things. One is this book. He will ask for your receipts and he asks for your bank statement. That's all. So to avoid forging figures, because some of the auditors are very strict, they will never allow you, they will never play balls with you, they will never play games with you. They will represent things the way they are. So don't cry if they finish your audit and they tell you that your company is what is not. They will only report what they are seeing. So to avoid that, keep your records. Keep your records. Now, what will the auditor give you? What is that audited account? What will you get in the end? You get 3 books. Please pay attention. 3 books. That's when you hear audited account. It contains 3 books. That takes us to financial statements. Now, the 3 books are the income statement. Put it on the screen. The balance sheet and the cash flow statement. The income statement, the balance sheet, and the cash flow statement. So whenever you hear that an accountant is doing audits, these are the 3 books. We are writing business plans. In the business plan, you're in their financials. You still need to present the income statement. You still need to present the balance sheet. You need to present the cash flow. But what is the difference? The ones you're presenting now is projection. You are telling the bank, you are telling the whoever you want to get financing from that, look, in 2026, my turnover is going to increase from 10 million to 20 million. In 2027, it's going to increase to 35 million, just like that. So know the difference. Your financial statement in a business plan is going forward, 2025 to 2029. But if it is for pure company audit, it goes backwards, what you have done. Please note this. All right, let's look at the income statement. I'm just going to explain it. You don't have all the time, so I'm going to be quick, but you will understand. I'll make it how everybody will understand. Now, when we talk about income statement, please pay attention. We are back to this book. We are back to this book. Most times, you people don't like accounting, but you will see that it's very sweet. You people, it sounds somehow to you guys, but if you listen to me, you can say I'm just discussing it like story. That's how accounting is. There's nothing serious about it. Now, you see this book that I have here? It is your income statement, profit and loss. That is what it is. That is your income statement, profit and loss. Let me explain that to you. What did I ask you to record in this book? Is it not income? Expenditure. Finish. So if you have this book, when the auditor comes, it makes life easy for him. Now, look at the next slide. This is what you talk about when you talk about your income statement. Remember what I told you record in that book. Your revenue, that man that did revenue of, is it 2,000 or how much? The expenses. So, when the auditor comes, he will add up the entire revenue from that book. He will check it, check your receipt, check the bank statement. He will check your expenses, check the receipts, check all the expenses, and check all the bank statements. Now he will subtract your revenue from your expenses. That is your net income. That is why it is called income statement. That's why it's called income statement. So if you don't keep your daily records, you are likely to forge it, like most of you do. But when you keep it, it makes the job very, very easy for you and whoever your auditor is. The only other thing that they will do is, please, you know that it's from here they calculate your tax. So you have your profit before taxation and profit after taxation. They will add that to get your net income. So that is your income statement. So when you hear that a business plan is feasible, what they have seen is that when they subtract the revenue from the expenses, it's not negative. Also, it is not all the time that when it's positive that is good. Some of you are heavy spenders. If you do business with 20 million naira and you make a profit of 2 million, the bank won't give you money. So they're expecting you to at least return 30% of the money they gave to you. So when they look at your books and they see that you're a very reckless person, in as much as you are getting profit, you may not be granted that loan. You may not be granted that loan. So this is what we call income statement. So I hope you're all getting this, because it's very, very easy for you guys to understand this. A lot of people run away from accounting, but it's very sweet. Okay, so the next one is the balance sheet. We've talked about the income statement. The next thing we want to talk about is the balance sheet. Now, when we talk about balance sheet, these three things are, I've talked about the income statement. The income statement is one of the things the banks look at. Now, the next one is the balance sheet. Please put it on the screen. Let them look at it. Now, look at, this is balance sheet. When we talk about balance sheet, what does it contain? The balance sheet shows your assets. You can see what assets are. We're talking about your lands, your building, your office equipment, your inventory, all the assets that you have. Then it also records your liabilities. Liability is what you owe, everything you owe. It may include loans, it may include payables. Remember, I talked about account payables and account receivables. Things, debts that you owe. Your assets is what you own. Liability is what you owe. Then the equity is capital, probably which the directors of the company are putting into the business, or last year you made profit from your income statement. Let's say you made 10 million naira. So instead of squandering it, you decide to use 6 million naira and bring it forward to the next year. So that's your retained earnings. So it also shows that you're a disciplined person. You know, some of you, at the end of the year, when you make money, just squander the whole money. So they are looking at your retained earnings. So some of you, you don't even know why they don't give you loan. You go and show a bank that you made a profit of 10 million. Then when they come to your balance sheet, they don't see anything. So you spent your whole profit. You are not a disciplined business person. So what does the balance sheet show? The balance sheet shows the health of the company, how healthy the company is, which is your equity. So what is equity? Simply the assets minus the liabilities. Sometimes you see some big men, you think they are very wicked. They are not wicked. You are even richer than them. All you are seeing are buildings, you are seeing jeep, you are seeing cars. Those are assets. You wouldn't believe how much they owe. So in the eyes of finance, they are poor because their equity is negative. Maybe you only have 20 million naira in your account. Technically, you are richer than them. So what the banks look at is when they say balance sheet, it's very simple. You know, a lot of you have been running away from all these things because you think it's hard. You can say I'm telling you that story. The assets you have, they add it up. The what you owe, they minus it. That's the equity. Now, this is what shows how big, how strong you are as a company. And please pay attention. If you're also looking for a loan, nobody can give you any loan above your equity. So that's a mistake some people make. Some people come to me, they want loan. I say, go and bring your detailed account. Their equity is maybe 50 million naira and they want 100 million naira. I say, no, no, no. So nobody will lend you money above your equity. It doesn't matter the collateral you bring. Some people, it's not collateral that they give you. After all, I have collateral of 500 million. Why can't you give me 100 million? Because your equity is negative. You can't get it. So I hope you understand balance sheet now. So whenever you hear balance sheet, they are talking about your equity. And what is equity? It's just your assets, what you have, minus by what you owe. So that's what we mean by balance sheet. The next one is cash flow. I told you there are 3 books that you will meet there. We talked about the income statement. We talked about the balance sheet. The last one there is the cash flow. This is very, very important. As an entrepreneur, you must monitor how money moves in and out of your business. So the bank is also looking at your cash flow projection. So in that audited account, they will want to see this. So the cash flow looks at 3 things. How does money move into a business? 3 ways. One is through operating activities. Put it on the screen. The other one is through investing activities. And the last one is through financing activities. Operating activities, investing activities, and financing activities. So how does this work? Now, operating activities is your day-to-day business. What I mean by that is the same in what you have in your bookkeeping. You sell products, you render service, you also spend money for utilities. So these are operating activities. So this is how money moves around your business through operating activities. You buy, you earn money, money goes in and money goes out. So this is how it goes. The other one is investing activities. Now, in your company, you can own a building. You can own assets. Remember, we talked about assets in your balance sheet. Now, you decide that, oh, I bought this property in the town, very low, and now it's high. Maybe it's a property you bought for 5 million. Now it is 60 billion because of development. Now, you decide to do what? To sell it for 60 million. Now, out of that 60 million, you say, okay, I'm going to keep back 30 million naira in the company account. Then you use 30 million, move to another location, and still buy land. So money have moved in and out of your business through investing activities. You've sold your asset and you bought and you invested in another asset. So that asset, you could not just be buying land. You could go and buy shares. You can invest in anything. So you can see how money came in by your disposing the existing asset you have. Then you now reinvested in another asset. Now, cash flow from financing activities. Pay attention here. Now, some of you already have shares in companies. You have a lot of shares. You have you've already invested. You have a lot of things that you invested in. So now, those things you can make profit from. Let's say you have shares in UBA, a lot of shares in UBA, and at the end of the year, you make a dividend of 3 million naira. Now, money has flowed into your company through financing activities, through those shares that you have. You can also say, okay, out of this 3 million naira I made from UBA, I want to buy more shares. Or I want to use that money to pay off my loans. So you can see, so money is moving in and out of your company through financing activities. So just to recap, money moves in and out of your business through operating activities, through investing activities, and through financing activities. Okay, please, this is a very technical class. So if you have all the questions, please post it on TikTok here or post it on your WhatsApp platform. I'm going to answer a lot of it. I know you will have a lot of questions. So post those questions. I will answer the questions. All right. Now, how do you assess money? How do you assess funding? How do you assess funding? Please put it on the screen. These are important ways you can assess funding for your business. Personal savings from your family and your friends, from banks, from grants. So it's very, very important that everything I have said here, you keep to it. So through the ways you can source funding, especially if you are now looking at banks, that goes back to your financial records. And I told you that everything I'm going to be talking about today, I'll be talking about this book. So it's important you keep your financial records clear. No bank will give you money if you don't have financial records. A lot of you come and say, oh, banks don't give money. How do banks make money if they don't give money? Every bank makes money through giving out money, but they don't give it to anybody. Okay, if you are the bank, will you just give your money to anybody? The answer is no. That is the way banks select people they give money. So you have to be very, very meticulous the way you run your business, especially when it comes to keeping records. Now, peradventure you make money, they give you a loan. Please, some of you have very bad attitude towards loans. You're killing yourself, because anytime you grow your business to the point that you can get loan, you can get credit, you have survived. Because all of us here, every day we are running into opportunities. But what is the challenge? The challenge is that we cannot finance it. So when you grow your business to such a point that you can walk into any financial institution and you just get money, you are made. But the problem some of us have is that as soon as we get that first opportunity, we blow it. We blow it. So ensure that you don't ever ruin your credit history by not paying your loans, not just paying it on time. Of course, the lenders will need you to prepare a business plan let me talk a little bit about tax and some compliance. Now, please pay attention. If you are listening to me here and you are doing business and your business is not registered, then you're wasting your time. It costs you just 25,000 naira to register a business. Until your business is registered, you don't have a business. What is the meaning of this? What it means is that you've already put a cap on what you can achieve. You've already put a cap on the kind of opportunities you can exploit. So it's important that you register your business properly. And at your level, don't go and register a limited liability company. Please just stay with an enterprise for a lot of reasons. One is it costs you less to achieve the same things you would have achieved using a limited liability company. For instance, if you are taking a loan from a bank, let's say you are taking a loan of 10 million naira. One person has a limited liability company, the other person has an enterprise. Under the cost of things now, the person with the limited liability company cannot spend less than 500 to 600,000 naira just to apply for that loan. But the person with enterprise could probably spend around 100,000. Why is it so? If you have a limited liability company, you are now responsible to people. So the financial institution will demand a 3-year audited account from you. The same amount of money. That alone is 300,000. But they are not going to demand that money from enterprise because an enterprise is the same person. Your enterprise is you, so you are not accountable to anybody. So some of the things they be demanding from a limited liability company, they don't demand it from you. I'm not saying that you shouldn't have a limited liability company, but you need to be patient to grow before you start using that, or else you're going to be having a lot of inconvenience. Now, please make sure that you always file your tax returns. You see, in the past, we ran away from these things, but not anymore. Even if you are not supposed to pay tax, go and get your tax clearance. If you go and tell them you didn't have tax clearance because you didn't pay tax, they'll say yes, you will not pay penalty. see how disciplined you are. Remember 5 C's of credit. They want to also know your character. Some of you in your business account, you're buying clothes, you're buying cosmetics, you're buying shoes, you're buying makeup. You are a responsible entrepreneur. They will not give you money. You can start to shout as you like, but they will never tell you why they are not giving you money. So what should you do as an entrepreneur? Maintain a separate business account and make sure that the only thing that happens there is business. Nothing else. If you want to take money, you record it as a loan you have taken from your business to your personal account before you spend it, and make sure that in that same record you return it back. You must keep yourself on a salary as the owner of the company. You must always keep your books. Very, very important. I don't want to say much on that. I've told you the important. Ensure that you keep very strict to your budget. When we do business plan, I'm going to show you on your income statement why this is very, very important. Do not ignore paying taxes or other compliance things that you need to do. Whether you pay or not, please make sure that you comply with it. Finally, never you start your business hoping that you will use loan to start. That is an error. I see a lot of people, they want to start business, and from day one they are thinking that they are going to be using loans. No, if you do that, that is very, very wrong. Every entrepreneur, like all of you looking at me, you must put yourself on salary. Don't touch your money until you declare profit. And all this should show in your books. You must track all your expenses, and please stick to your budget. Do not be reckless with your expenditure. Do not be reckless with it. All right. Just to round up the class, please put slide 27. These are some of the resources you need to keep up with your financial literacy and planning. Put it on the screen. You can use this book. But please, for some of you who are a little bit computer literate, you can get some accounting software. There are a whole lot of them now you can access to track your accounting. For your budgeting, there are also some apps you can use. Please, there's a whole lot going on in empowerment. A lot of us are not interested in training, but the few days you have been coming here every Saturday, you have learned enough. So please pay attention to training, pay attention to mentoring programs. Don't run away after you get your empowerment. Continue to seek knowledge. The internet is there. Also attend programs where people physically explain some of these things. So, in conclusion, please remember that financial literacy is key to your small business success. You must learn, you must plan, you must track, and you must improve your business continuously. Make your money work for your business by practicing proper financial literacy. Thank you very much. All right, this is where we'll end the class today. If you have questions, you can ask. You can send in your questions. Like I said, send it into this TikTok or send it on the platform. I'll see you next week. Thank you and God bless you. Bye.